Well, good evening, everybody, and welcome to another episode of Trader Cafe. As always, what we try and do is we try and bring you a little bit of new content from time to time. And rather than just interviewing folks, we thought we'd take a breather from that for the next 2 or 3 sessions, and hopefully I can try and discuss some of the subjects which I think are not being covered by everybody out there, but maybe of use to some of you guys to maybe help you understanding your trading better. And really, that's what we're here to do, right? We're here to develop ourselves and make ourselves a better trader overall. And I think this is what the Trader Cafe does in its interviews with everybody, and also with all the people that we speak to and getting their views as well too. So listen, today is a session about the trader intuition. Okay, so what do we mean by that? How can we acquire it? Because it sounds quite a sexy thing to have. How can we acquire it? And what can we do to train ourselves to acquire it as quickly as possible? Now, I know that you often hear people going on about the psychology of trading. Well, so really what I want to try and do today is take you into the world of mental capital. And I think that's the key thing for me. So just hold on while I share my screen, and hopefully this will pop up quite quickly for you guys. Okay, hopefully everybody can see that. Guys, so we've got the chat running as well too, so I really, especially in a session like this, really appreciate some questions around this if there's anything that you're concerned about. So why don't we just crack into it and we'll see how we get on. So listen, I think for me, obviously we have to do the disclaimer thing as we always do. And I constantly come back to this thing. This is about developing your edge. So the Trader Cafe is there for you to find out from other traders their experiences and really get into that. And then, as I say, recently we've been focusing on some individual sessions. For those of you who remember, we did gold 2 or 3 weeks back, and we did a real deep dive into that market. And I think it was quite timely because it was just before gold began to break up. Now, we'll obviously have views around that, and the market's a little bit different. We've moved on a month, but it's quite exciting, and maybe we'll try and do more of these sessions going forward and intersperse it with interviews with people as well too. So today, guys, we are going to talk about the mental side of trading. Now, I keep coming back to this for those of you who have been to see me on it seems a long time ago now on some of the retreats, and had the opportunity to sit down with me for the day. And when I've done full one-day courses, I tend to focus on this side of thing quite a lot. And there's a real reason why I do it, because I think that mental capital and the confidence to be able to trade is an incredibly important part of trading. I just do, right? You can have all the physical capital in the world, but if you can't trade because you don't have enough confidence, then two things are going to happen. One, you're not going to exploit the capital that you have enough, the physical capital that you have enough. And the second thing is, you're more than likely going to struggle as a trader and start to think about, am I any good at this? And, do I need to give up or something like that, right? And so really what I want to try and do within that is to try and give you guys the confidence, the all around trading approach that we need. You can learn technicals as much as you want, right? We can all go out there and we can look at a chart. We can learn the sentiment cycle. We can learn to interpret some of the fundamentals in the market, which in many cases are just long-term technicals. Right? And then on top of that, we've got to try and figure out how that holistic edge, that holistic technical knowledge that we have, how can we then apply the mental side of our trading into that to get the best bang for our buck and really develop. And for me, what this is taking people who are just break even as traders onto the next level. What stops a trader who's already at break even becoming profitable overall? That's really what we really want to try and get into today. So we'll have a brief look, and hopefully some questions will come up. For those of you who are listening to this live, some questions will come up and we can go through this. Right. So listen, mental edge, is it a thing? Well, look, absolutely. Of course it's a thing. And it's totally within your control as a trader. Okay, so when I talked about this, right, I keep coming back to this thing of mental capital. For me, it's incredibly important. Okay, you've got physical capital and you have mental capital. And it sort of cuts both ways, right? So am I knackered? I've had a tough day at work. Do I really want to sit down in front of my screens? Do I really want to try and work their way through? Or am I a day trader? I'm trying to make money every single day, turning over those quite a large number of trades to try and make a relatively small amount of money. And what does that mean? Per trade, that is, amount of money per trade. Obviously, try and build it up on the daily basis. But, and trying to manage my way through that, which can be incredibly tiring, no matter how you do it. If you've just started out, having to sit in front of a screen for 6 or 7 hours a day is hard work. I know, I've done it, right? We've all been there. But really what I believe this is all about is about trying to figure out what's sabotaging your trading success. So what's stopping you, right? You've been given, if you're part of Actions to Wealth, you've been given the tools that you need to be successful. There's no question about it, guys. Now, some of you may not feel that you're ready for that yet. Some of you may feel that you're still learning, okay, which is great because that's an admission, like a self-awareness, right, about what's happening in the way in which you're learning to develop as a trader. Okay, so that's quite interesting in itself, right? However, what we have to try and do with this is to take it a stage further, and you've got to work on your mental side of trading right from the get-go. It's not good enough to start saying, no, I'm going to master how the markets work first, then I'm going to master some technical patterns, and then I'll master the mental aspect of trading. It doesn't seem to work that way, right? So think about it. I always love to try and draw these out in analogies, and maybe a really good analogy here is around music. Right, for those of you who work with Ash, then you'll know that he's a really great musician. But you need to understand what the difference between a great musician and a good musician is. So what is the difference? Well, they all have the same kit, right? Everybody has a guitar, everybody has a piano, everybody may have some drums. What's the differentiation between a good musician and a bad musician? They can all play, right? But you can tell a good musician, he just makes it sound differently. That's what we're trying to do with our trading. So another way of talking about this is the difference between trading instinct, which is a calm space. Okay, I know. It's I know space. And the impulse. Oh, I've got to take this trade. Why have I got to take this trade? I've got to take this trade because I'm trying to follow a rule. I've got to take this trade because I need to make the money back that I've lost earlier. I've got to take this trade because if I don't, then it's going to look to my wife or to my parents that I'm not really good at this, and I've got to keep pushing. I've got to keep trying. Okay, that type of approach. Okay, that type of approach, which is different to trading instinct. So trading impulse is what we've got to try and work our way away from. I'm going to bang my table, metaphorically as well as physically here, but I don't want to disturb my glass of water. So I'm going to try and bang my table and say to all you guys and girls out there, like, this is what you've got to think about, right? I'm trying to differentiate between the two distinct types of emotional responses, right? The calm, the zen, the mindfulness, and the impulse. Okay, less of the impulse and more of the calm. That's what we're trying to achieve. That way, you just know as a trader. Okay, and that's what we're trying to achieve. Now, I'm sure there'll be some people out there, absolutely guarantee it, who'll be saying to me now, Julian, if you were sitting there having a conversation one-on-one with me, I would be saying to you, but hang on, I've got to learn about markets. I've got to learn what foreign exchange means. I've got to learn what inflation means. And I get all of that. Okay, but what you've also got to do is to start to think about reading other people. Now, I guarantee you that most people out there have an ability to read other people. When you sit there face to face in a room, sometimes even on Zoom calls we can do this, you can see people's reactions to things. That's sometimes the reason why we prefer meeting face to face than we do on a Zoom call, right? Why is that? Well, it's because you can see everybody's reactions. And you can see that little micro expression that goes across people's faces that sometimes you might miss on Zoom. If you've got 4 or 5 people on the screen, you can't focus on everybody, right? But you can feel it in a room. And there's that thing, you can feel it. Okay, that's what we're trying to develop. So you've all got it. Okay, everybody has this to some extent. What we've got to try and do is to bring it out in our trading. Okay, we've got to bring it out in our trading. You've got to try and understand that the people on the other side who are making the other decision, yes, they may be a computer, but computers are programmed by people. Okay, it's trying to read those people and those patterns before they're going to happen. That's what trading is all about. I think it's going up here. I think it's going down here, right? That type of approach. Now, how do you do that? It's about developing the talent, developing the pattern recognition, developing all the confidence to do it. And I think that's the key thing. It's getting this confidence. Okay, so if you think about it another way, right? Listen, people are quite good. Some people are quite good at reading the market. Okay, and there's 2 basic states, right? There's reading the market, and there's also risk management. Okay, so those are the 2 basic methodologies that I'm talking about here. Some people are really good at being able to understand the market, see it as another person, understand what is happening out there. Okay, but they can't do the risk management. Other people are really good at the risk management, but they can't do the market read. It's when you combine both of them together that you've got the recipe for success as a trader. Now, I think you can take just about any of the traders out there that I know, the most successful traders that I know, and they all have this in spades. Right? And you say, okay, why? Well, why? Well, because they understand both elements of this. They understand what they have to do to develop both of these elements of their trading, so-called trading intuition. And look, I think you can be successful with just the risk management, taking your trades when you're meant to take them, taking it with a set P&L, taking it with a set profit target, with a stop loss. Okay, anybody can do that. Okay, so they can develop that market, that risk management element. But where the market read comes in is enables you to do the things and to have the confidence to go, oh no, I know. No, now this is a bigger trade. What do I do now? Or people that, you would like to have an ability, you say, look, I'm really good at being cautious, but I want to become more aggressive. How do I do that? Well, that's about that market read. Those are the things that we have to pick up. And look, I think the most important thing about this is that trading is like just about any other. I always like it to a lot of other sports, actually. It's like any other sport. It's a social game. It's about us developing that belief and that confidence in ourselves. Now, we always, often people sort of talk about this in a very ethereal way, and they say, oh my God, how do I do this, right? How do I develop that amazing trader confidence that other people seem to have? Well, then I'll ask a similar question. How do you think a golfer goes from a handicap of 20 to a handicap of 1? Right? How do you think they do that? In there may be some talent. I'll grant you that. There may be some talent. But most of it is around practice, is around hard work, is around repetition, and is around confidence. Right? So then the question you've got to ask is, how do you become more confident? Okay, and I want everybody to have a think about this, and please throw some questions at me, all right? Okay, if you'd like to think about how you do this, if you're willing to share, and make it anonymous if you like, if you're willing to share then it would be really good to have somebody maybe come up with a couple of their problems. I can help a little tonight, and we'll just see. But let's see how we get on. But this is about improving your confidence. Okay, you've got to do that. You cannot do one without the other, because people. So I think. So for me, another way of putting this, right, is this comes back to this whole musician thing. People say, oh, he's a good golfer. He's got really good hand-eye coordination. Well, what is that? What is hand-eye coordination? Well, they probably, when they were 2 years old, were throwing a tennis ball, right, against a wall and trying to catch it. That's what I think we're talking about, right, when we talk about good hand-eye coordination. So when you think about trading, sorry, my son is sneezing quite badly here. When you think about trading, then you've got to think about, what are the key things that I need here? What are the things that I need that say, oh, you've got trading talent? So think about it that way and go, gosh, there's got to be 2 or 3 things in there. I don't think I have to be a good economist, right? For sure. Economics is useful, right? That helps you understand the fundamentals a little bit better, but I absolutely guarantee you that there's a lot of really good economists who are utterly appalling traders. So it's not about that. You go, is it my ability to read patterns? And I guess the answer to that would also be yes as well too, to some extent. You go, well, that's really quite important. Can I draw a trend line on a chart? Can I see a Fibonacci retracement? Can I see the market coming back? Can I see this? Okay, well, yeah, there's a lot in that, right? But that's repetition and it's training. And you go, okay. And then you go, well, right, how do I then move from there to the point at which that is essentially, if I get this right and get it right regularly, probably break even? How do I then move to be the really successful trader? It's the ability to be able to put on significant positions when you need to, when the time is right, when you feel it, when you have that calm, if you like, you're in the zone. Okay, and that's really what we're trying to do here. So it's not just the technicals of the market. You've got to bring more to it than that. So people talk about, here's some of the things, right? So one of the great, here's how you solve every single golfer's swing, right? Everybody says, keep your head still. Well, that's just marvelous. What the hell does that mean? And nobody actually knows what it means. You try and keep your head still and you still don't hit the ball any better, right? It's the same thing. It's the same thing in trading, where people say, hey, look, follow the rules, and then everything's fine. So you take all the emotion out of the decision making. Well, actually, there's umpteen studies that have said if you take emotions away from the human psyche, then no decisions get made whatsoever, let alone following the rules. So you've always got to have an emotional overlay to everything you're doing. Now, what you're trying to do there, I think what those people are trying to say is they're saying you need to have the confidence to execute. Okay, so how do you get that confidence, guys and girls? How do we get that confidence? Well, we've done it before, we're doing it again. How do we know that this time it's different? Well, that's the trick, right? And so you say, well, if I've done this enough, then maybe I can begin to train myself. But equally, I can also train the confidence here as well too. So you say, okay, when I am trading well, I need to continue to trade aggressively. When I'm trading poorly, I need to trade a little bit less aggressively. So you think about those things, right? That's about building that confidence up. So some of it is the self-awareness, right? This is part of the issue. So when you think about, so I've always said that trading, whenever I've been training traders and coaching traders, I find it really interesting, because what it does is it unpicks your character. No matter who you are, it unpicks who you are and what you are. Okay, so does that mean that I'm a good trader or a bad trader? Absolutely not. It just challenges you to the point at which you either succeed or you fail. Okay, so some people can't cope with trading. There are some professions out there where you are trained from a very young age not to fail. If you think about, I don't know, let's randomly take the medical profession, right? You want your doctor to make the right diagnosis and give you the right medicine 100% of the time, and that's trained into them. Make sure, be confident about your decision and make sure you're giving the right medicine out. So in the case of most doctors, they find failure a very small minority of their decision making are poor decisions. So how does that work in trading? Well, in trading, we're taught that quite often 60% or we're only right 60% of the time, which means 40% of the time we're wrong. So you think, how do doctors manage? Well, what happens is they tend to then unpick themselves, right, and go into a more emotional response about how they're trying to win as a trader, and then all of the poor traits that any character has starts to come out, right, about the things that they've done well or things they've done poorly, in their earlier childhood. I know it sounds a little bit Freudian, but often childhood is a incredibly important learning space for the character traits that we have as we get older. So what you've got to try and do is to have the self-awareness, understand that you are a person who is used to making lots of decisions where you can not get anything wrong. Go, oh God, right, okay, if that's the situation, then me taking a trading system that only has a 30% success rate is probably going to drive me insane. So how do I then need to develop an awareness to be able to get my success rate up to the point at which I'm comfortable, because that matches my outside experiences, right? And you've got to think about what that means. Yeah, and I think, guys, you've seen the element of this here when I talk about music, right? You're not just the instrument, you're playing the instrument with emotion. So I think really for me, what pattern recognition boils down to is something really simple, right? It's about predicting what's going to happen next. So we don't know what's going to happen next, but we have a good feeling. Now, why do we have that feeling that what's going to happen next? Well, that's because we've seen it before. We understand it's going to happen. And then when it starts to happen, we need to press our winners as hard as we can, right? So, and I think there's really something very important that goes on here. So if and you will understand this from those of you that follow any type of sports with any type of team sport or even individual sport, is that when people get on a roll, they get on a roll. They call it, it's cool and get on a roll. What does that mean? It means that winners beget winners. Okay, and equally, sadly, at some point in time, when you start to lose your confidence, losers create other losers. And there's a heaps and heaps of research out there which talks about this exact thing, right? So if as a trader, you're confident, I guarantee you that you will win more often than a trade than when the exact same trader is less confident. So in other words, confidence breeds success. Now, why does that happen? It's because in your mind, you've associated the fact that you're doing well with being able to read the market, with being able to figure out that in reading the market, I'm reading the other people out there and I understand what they're thinking and why they're thinking it, and now I can act on this. That's why it's really important to develop the confident attitude that you need to have. Now you say, okay, hang on a second. I'm going to take a Tony Robbins course, right? Well, no, I don't quite mean it like that, where you walk around being confident all day long, 24/7. Okay, exaggeration. I apologize, Tony, if he's listening. But the key point about this is what you're trying to do is to develop a confidence about what you're doing in the trading space. Okay, other things may be happening in your life, but you just keep that confidence going in the trading space. And by doing that, you create a whole series of emotional experiences. Now, how does this work, right? So I have, and it's a bit like sport as well too. I have played sport well. I have traded well today. I have made money. What did I do right? What did I do wrong? Well, I didn't do much wrong, so that's okay. And I parked today. The real experiences come when things go wrong, right? When you lose money trading. So then you say, why did I lose money trading? Okay, so is it because I was impulsive? Is it because I'm going, right, the first trade was a loser, I've got to get that money back, I'm going to show them, I've got to get that money back, I'm going to prove to them, and whoever them is, I'm going to prove to them that I can do this, that I can do this job, that I took this chance here, that it's I can do this, right? And then you then end up pressing what is a marginal trade, and funny enough, that doesn't work out as well too, and you go a string of losers and you double up on the amount of money that you've lost that day. Another way of looking at another way of looking at this is if you don't quite get to the goal that you're trying to get to, right, on a day, you then try and press a little bit at the end and end up losing half the money again. You've got to figure out that it's okay. You've got to have that self-awareness, say, oh my God, what did I do wrong there? Well, okay, I pressed when I shouldn't have done, or I tried to take a trade that was marginal, and work out what those feelings were at the time and have that self-awareness to be able to spot this, write it down and said, right, loser today because, right? Don't worry so much about the winners. Just find out what went wrong and how you felt emotionally at the time about the losing trades, right? What was going on? Try and unpick this a little to be able to give you the confidence to say, oh, hang on, I feel this same emotion this time. Last time I had that, it wasn't a good space for me. So I'm going to dial things back. I'm going to step back for a minute. I might even take a 10-minute break. I'm just going to walk away, come back to the screen with a different attitude, and maybe that's going to help me. And the remarkable thing is, it will help you. Okay, there is absolutely no question about it. You will get a better performance if you are more confident. So you've got to think like a sportsman. You've got to think about a training program where you can develop that confidence. And that could be any which way, guys. You can know how to do this as well as I do. Some people who are, over the age of 25 will understand this, right? They'll understand the challenges that you have in life, and they'll understand how to think about overcoming them. And this is what it's so important. So I will put to you that part of the things that you've got to think about is, what is the training program I need to get more confidence in my trading? And then that will probably allow you to examine the bits of your trading that aren't going well. And as a result of that, you will start to improve on the things that you need to work on, right? And isn't that a better place, right? Isn't that a better place as a trader? And when things are going well, you will maintain that confidence level. And that's the equally important emotional state, right? You say, great, I am trading well at the moment. Why am I trading well? Well, I can tell because I've had this trade, and they've been winners. So I feel like I'm in tune with the market. I can see where it's going. And people say this, right? I sometimes say, I can see where the market's going to go. It's obvious to me some days where the market is going to end up. Not obvious how it's going to, the journey, but I can see where it's going to end up. And so for me, that provides me with a tremendous amount of information that goes into my brain and says, oh, right, okay, well then trading is easy from here on in, right? It's just easy. Okay. So I think part of this training program thing is around, they call it emotional granularity. I'm sure there are many other words for it, but this is about separating those feelings out. Like I said earlier, you've just got to try and understand when things go badly, why they're going badly, what's the cause of it, can I fix that? And if I can't fix that, what can I do to mitigate it? When things are going well, it's how do I take that and turbocharge that, not in an excitable way, in increasing my calm and my mindfulness about the fact that I'm in the zone, and be able to press harder knowing that I've got the read of the market. So I think I'll probably skip over a little bit, but I'll probably use the analogy here, right? Is that I love this bit at the bottom. And I borrowed this off Denise Schull, actually. She was quite talking about this the other day, is that she said the top of the tree is based on the roots, and we are all built the same way. Okay, so essentially our characters are somewhat set in our pathway from when we're a little bit younger. In order for us to improve, to change, we need to have that self-awareness that we are who we are because. Oh, awesome. Okay, I can't do much about that because I can't change what I was like at 6 or 7 or 8 or 9 or 10. But what I can change is understanding that I'm in that space and being able to cope with it. And then using it to my advantage, because somewhere in there, you'll break even or a little bit better than that as a trader. You've got a trading edge. All you've got to do now is to go pick it, grab it, take it, jumble it around a bit and make it much, much better. So really, I think for me, it's about this difference between instinct and rules, right? So what does it mean? It's like we all see this, right? If you're in all walks of life, it's like if you put somebody on a production line for the first time and they're trying to do the same thing that somebody else does, it's a relatively similar, simplistic job. Why does the other person do it in half the time? And they do it almost subconsciously. Like they don't even have to think about it. Their hands are just moving. And then it's really about looking over what they're doing to make sure that it's all going smoothly. And maybe they can improve a little bit more and they can go a little bit quicker because they're feeling okay that day. And it's the same thing with like a lot of 40-year-olds are better at quite a few jobs than 20-year-olds are. And why are they better at that? Because they've been doing it for so long that they actually have it programmed in. So this is why. So say to everybody when you're starting out as a trader, you cannot train enough. What you've got to do, find the training mode on your chart program, whichever one you're using, tab forward one day at a time or one period at a time, one bar, one candle at a time. Go back through, go back 3 or 4 months to a piece of chart that you've never traded before, a currency pair you've never traded before, a time frame you've never traded before, and just tab forward and say, what can I see? Can I see my ring low formations? Can I see ABC? Can I see, I don't know, the short-term oscillator signals that I know developing? Then what do I do about it? How do I do something about it? And how do I exploit that advantage? Go over it over and over and over again. I've probably looked at, I don't know, 200, 300, 400,000 charts over the course of my career. I probably look over 15 or 20 charts during the week every day. Okay, so you start to add those numbers up. I don't even know what they are. There would be a ridiculous amount of charts, right? So clearly when I see something on the chart, I can look at it and go, oh yeah, look, there's a buy signal there, there's another one there, there's another one there. And I can see the signals. I don't need an indicator. Okay, I don't need an indicator next to me to understand this. What I need is just to be able to look at a chart and I'm fine. And I could look at really weird charts of just about anything. I was looking at coal the other day or natural gas. I don't trade either of those markets very often at all. I certainly don't trade coal. But what you can do is you can look at it and go, oh yeah, I know that that's going to go to here. Right? And here could be anywhere. So this is what this is. What you're trying to do is you're trying to develop that intuition, right? You're separating that impulse out, taking it away, not dealing with that anymore. We're taking our intuition, we're improving. It makes the difference. So what I've done is I've tried to put this into a bit of a collection. Okay, so I've borrowed some of these from Anthony Crudeli and from Larry Williams as well too. So I've sort of done a bit of an aggregation here. Bit of credit to those guys, amazing traders, fantastic people to listen to if you ever get the chance, right? Anyway, let's talk about trading instincts. Okay, just to make sure that we just go through this, try and summarize a little bit about the things that we're doing today, just to help you guys out, right? So let's start with the first one. Okay, you've got to be yourself. Okay, you've got to go through the process of learning about yourself and what works for you, right? Because trading is a journey about you. Nobody else can trade, it's just you. And thanks for that, Jason. Hey, look, I'll come back to the questions at the end and we'll deal with a couple of those in a minute. But it's really great that you're asking questions. Guys, you got any more, then just throw them in there and we'll try and cover those in the next 5 or 10 minutes or so. The second thing is you got to trade according to risk, right? It's really important. I think that new traders focus way too much on the entry and not enough on where they're wrong and where they're going to exit a trade. For years I have been struggling, and I'm happy to admit this. For years I've been trying to figure out where to get out of trades. But not for my stop loss. My stop losses are all predefined. I know exactly where they are. I know exactly where I'm going to get out if I am wrong. The problem that I've got is, where do I get out if I'm right? How long do I hold a trade for? What's the market condition that I've got? What am I seeing? What can I see there, right, in terms of the market condition, to try and understand where my edge is? Look, the third point is to always be a student. Today, I still spend my time reading about new trading ideas, reading about new traders, reading about new methods of trading and how I can program in and how I can appreciate things. Yes, I have a lot of things that I do myself now because I've been doing it for 35 years. So yeah, okay, I've got a lot of set methodologies for trading that I use. Well, not a lot. I've got 3 or 4 that I use, and I've added to them over the years to give me a little bit more confidence, if you like, for want of a better description, to improve my trader intuition. But you know, I'm humble enough in some respects to say that every day I wake up, I'm trying to learn something new. So I don't ever worry about the people, if you like, catching up to me in terms of knowledge, because I laugh about it and I go, well, you know, if it's going to take you a year to get to where I am now, brilliant, because in a year's time I'll be further on in my journey, and so, you know, we're all learning together. But but I'll still be a little bit ahead of you, right? I'm sure that'll stop at some point in time because I'll get old. But for the time being, I still love this. I still love trading, and I try and do it as often as I can. So I think you've got to have the ability to really understand why you're taking a trade, right? So are you trading for a good reason? So sometimes if you're following a system, right? So you say, okay, I'll say that, you know, it's got to get to here or whatever it is, right? And then I'll take the trade and then I think following a set of rules, providing you can do that, makes perfect sense to me, and that's absolutely fine. However, I'm a discretionary trader. So what does that mean? It means I don't have to take any trades whatsoever. So even though my system says, or my methodologies say there might be something here, if it doesn't look right, I just won't take it. Or I might take it, but I'll take it in small size. I'm not really too bothered. You know, I don't have to do it. Okay, sometimes that works in my favor. Sometimes it doesn't work in my favor, but I found overall that that's what I need as a personality in order to be satisfied. Okay, so if you think about it another way, you know, really good traders are sort of forced into trading by their system, right? So that's another way of thinking about it. Hey, look, I think you need to be aggressive at times. I can't say this often enough. You know, you need to find a way to take the account to new stratospheric levels, you know, make 10, 20, 30, 40, 50% a year. You've got to be aggressive at some point. You can't do that with relatively small amounts of risk. So this is why understanding the market is important. So you either trade a greater amount of risk all the time, okay, which is interesting, but then you've got to be used to what that means and have researched what that means for the P&L on the account. Or you've got to say, this is the time when things are going to be different. And because they're different, I can afford to push a little harder. Look, I think one of the things that I think everybody falls down on at some point in time is they forget to get out of losers. But the really most important lesson about this is guys, horrible days are not created on their own. They're created from a bad day. Okay, so not taking a loss when you should take a loss is a classic way of defining a bad day. And again, if you have a string of losses on a day, if you're day trading and you have 2 or 3, you've got to have an idea in your head to say, do you know what? I don't have it today. I can't read the market. I don't want to be involved. I'm going to get out and I'll go do something else for the rest of the day. So this is really key. And I think sometimes you can also develop the instinct to get out a little early. So you may have a stop loss that's determined in the market, but equally you can see the way the world is working and say, God, I'm going to get hit on this loss. I'm just going to think about getting out now, or certainly reducing my positions to get out earlier. Sometimes that's when instinct can really help you. And, you know, number 7 is always a bit of a hassly one, I think, because I don't like to turn my winners into losers. So if you guys figure the way in which I run my broadcast group, I have multiple positions on one trade, and I'm always trying to find a way to quickly make some money, right? To make some money so I can get out of, so the trade is going to be profitable no matter what. And I'm often moving my stop to break even quite quickly. Sometimes it works against me, but the vast majority of the time, what it does is it protects me from the downside. So if you think about it this way, if you do a third on any particular trade, right, you try and get out of the first third quite quickly. That leaves you with 2/3 of the position. what's happened is if you've made a profit on the first third, then that counts towards the other two. So if the market turns against you after you've made a small profit and then reverses and then takes out your stop, how much you've actually lost? We got 1/3 on your side, and you probably lost 2/3 on the other side, because if you make your take profit similar to your stop loss. So actually all I've really done is lost 1/3 of my capital on that particular trade. Or not 1/3 of my capital, 1/3 of my expected loss on that particular trade. Okay, so hang on a second, isn't this really good? So now what I've done is I've got a losing trade, but I've only actually lost 1/3 of what I expected to lose. Well, that's brilliant, isn't it? There's a flip side to this, which is when you win, you get out probably a little bit too early with some of the positions. You go, okay, well, all right. But then what happens? If I let the other positions ride, then they go to an exit point. And sometimes, as you've seen recently on the broadcast group, hundreds of ticks on some of the foreign exchange positions is where we finally got out of some of the market trades that we took, right? And within that, so you're saying, well, actually, what am I doing there? Well, what I'm doing is I'm making sure I'm getting out of my trades. I'm exploiting them as much as I can, but I'm always protecting myself. Okay, so if things went against me, it's not often that I take a trade that gets completely stopped out. Hopefully, it's not that often at all. But it does happen from time to time, and as always, traders go through bad patches, and I've had them just the same as everybody, and it keeps happening, and I'm thinking it'll happen into the future as well. But just remember that I think that's really important. Number 8, know when to stop. I think this is actually one of the most important elements of trading instinct that you can come up with. So when your mindset is poor, you've got to be able to stop. So think about it another way, right? Life gets in the way. It just does. So when you're not in the right position, either mentally, physically, emotionally, then don't trade. Because as I said earlier, do you remember what we were saying earlier, right? So when you're confident, you do better. Your win rate is higher. Okay, so when you're not confident, your win rate is lower. When you're not confident, in fact, the opposite. When your mind is in some kind of crazy, horrible place, right? Because life has got in the way. What's the best thing you can do? The best thing you can do is to not trade at all. If you insist on trading, you trade really small size. And then finally, you've got to try and be disciplined. So I think another way for me is sometimes people get a bit reactionary to the word discipline, because we get told what to do in quite a bit of our lives, especially at the moment by many governments. So I think what's important here is maybe to reframe this and say, hey, look, I'm going to maintain focus. And I think that's really what it is. Do you have the physical and the mental strength to maintain your focus? Because that's really, really important. So guys, I don't have any more slides, but what I will do is I'm just going to stop sharing for a second and come back to me. But let's look at a couple of questions we've got, and I won't call out anybody's names just in case people are seeing it. They can look it up. But I think just for the sake of people, it's maybe better if I don't call out their names. But so the first question is: it's challenging to stay confident when you get a couple of straight losses, even though you follow strictly to the proven high probability system and strategy. So listen, okay. My answer to this is always the same. Is it right? When you say you have a couple of losses, hang on a second, right? So you need to understand the way that your system behaves. Okay, this is incredibly important, guys and girls who are trading a system, right? You've got to unpick it. You've got to go back through it and do some back testing. What do I mean by that? Even at a very simple level, look at the last 100 trades that the system took. If you can't find them, go and find the markets, a collection of markets that will give you that last 100 trades, because somewhere in there will be a string. You will have a string of winners, right? A 60% probability successful system, which after all means it's going to make money over some point in time, right? Providing the win-loss ratio is above 50-50, right? It's above 1-to-1, right? You're going to make money with a 60% successful system. You just are. Okay, so the question is, how many losers do I have to go through before I recover enough to be able to prove those statistics through time? Now, it may be that your system is quite used to doing drawdowns that are quite extended. It may have 3, 4, 5, 6, 7 losers on the trot. So therefore, if you have 2, you're not even interested, right? It sort of goes, oh, okay, all right, well, what's the point of that? In fact, I always tend to think about it another way, right? I will look at the average number of the average number of not winners, but the average number of losers that I have. What's the maximum number of losers that I have? So let's say the average number of the average number of losers is 3. The max number of losers is 5. So in a row, I've had 5 losing trades, okay, in the past. So what do you do after you've had 4 losing trades? Okay, do you just carry on trading the system the way it was with low confidence because you think, oh God, it's just losing money all the time now? I get really excited and I go, oh my God, well, this is brilliant because the max number of losers ever had in the past is 5. What I'm going to do here is for the next trade and the trade after, I'm going to trade more aggressively because there should be a mean reversion here. It should not carry on to 5, 6, 7, 8 losers because history has told me that that very rarely happens. So if somebody said to you there's a 95% chance that trade 5 or trade 6 is going to be a winner, would you take it? So how are you going to know that? Well, you're only going to know that through looking at the past records of that trading system and preferably the trades that put it there in the first place. So what went right, what went wrong with those markets at the time when you had all those string of losers? Can you get a feel for the way the market was or wasn't behaving for your system? So this comes down to, you can derive the confidence from knowing the stats on your system. And if you know the stats on your system and you've been doing it for long enough and you're comfortable enough with it, from there becomes the confidence that you need in order to succeed as a trader, because you go, great, I know when I can push a little harder. And it may seem nonsensical to you to be pushing a little harder after 4 losers because you're pretty depressed. Oh, I've got this 70% trading system and now it's down 4 times out the last 4. What do I do? Well, you just got to understand that that's highly unusual. So either something has changed in the market and your system isn't working, or you're about to have a run of really good winners. Right? So understand that. From that, you can then build the confidence to be able to know that in fact you can get excited when you get close to your envelope of losers. So for those of you who are mathematicians, I stick a standard deviation on it. You get to 1.5 or 2 standard deviations. This gets really exciting as a trader, really exciting, because you go, great, now I've got a much higher probability of success based upon the history of the trading system that I've got. Therefore, for me, I may well think about increasing and not decreasing size. So the next question is, guys, there's not enough information on order types. Like, my strategy is sound, but where to be waiting with limits on pullbacks or a buy stop above the candle that touches the pullback. I'm really sorry, I don't understand the question you're asking me. So if you're saying that I don't understand the different order types that are available to me on the platform that I have, well, okay, hang on, that's you doing some homework. Okay, so you've got to go and find out. There's only in the markets, there's only about 7 or 8 different order types that you can possibly have across any market in the world. And usually there's 3 or 4. Okay, you've just got to understand what each of those order types means and means for you. And in some cases, some of the trading platforms that are out there actually run protective stops as well too, which are quite useful. So you may have a cross rate that has quite a bit of volatility in the low, outside of traditional hours. And so especially like on a Monday morning opening, on a Friday evening, sometimes there's some craziness, sometimes in Asia that there's things gapping a little bit. And, before you get into the core trading time for foreign exchange, which I guess is the London hours. So, this is about understanding what all those particular orders mean and how the platform that you're using responds to the market when you're confronted by some of those. So some of the platforms are really good and they'll actually not stop you out, even though the market has looked like it's traded in that zone of where your stop loss is, because they know that the bid hasn't, if you're trying to sell, that the bid never quite got to your stop loss, if you like. And so it's just really important thing to understand the mechanics of the orders. All of this can be looked up online, either from your individual provider who will have all those details, or you can just go look it up on the internet. Guys, there aren't, like I said, there aren't really that many different types of orders, so not that hard. I hope that helps a little bit. Hey, so I've got a couple of other questions. I'm just hold on 2 seconds while I pull up some of the other questions that I've got here. Here we go. And so I've got a question here. What is the best way to train a person's mental edge in trading? And how long does it take for the mental edge to be developed so that the trading results is consistent? Well, this is a bit like saying, how can I improve as an athlete? Okay, so if I reframe that question and said, how could you improve your confidence as an athlete? I think you'd have a pretty good idea of how to do that, right? And then say, how long does it take? Well, then as an athlete, you would understand that question as well too. So the short answer is, the harder you work, the quicker you get there. Guys, I've just seen the time, and crikey, it looks like once again we've just run short of time. So listen, I hope you've enjoyed me talking about some of the psychological aspects, the mental edge of trading. I view it as being incredibly important. And as always, everybody, wherever you are, if you have been, thank you very much for listening, and I'll see you again next time.